and welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. It is another beautiful Thursday out there, and yes, the week is almost over. And what am I bringing our attention to? Because there's a lot of news I want to cover today, but it's the one chart to rule them all. That is the US dollar. And just really quick, what I wanted to point out to you here is the volatility is extremely low for the dollar. It is almost the lowest read we have seen since February of 22. Now, if we go with the theory that we're in an uptrend, so we expect when volatility expands, the price to go in the direction of the trend, I would say that the dollar will catch the next direction for the overall market, given that when the dollar goes up, risk assets typically go down. And I'll just give you an example here, which I hope it works out because I didn't even do the math behind this yet. But last time volatility was this low, we expanded from this pivot. So let's define expansion. Do you want to call it when we regain the white moving average or just a slight pivot up? And to be fair, I'd say more likely than not, it's when we regain the moving average. So let's just take a look and zoom in here. So we'll call it on this candle right here. And as volatility expanded, we saw the dollar, so I'll zoom it in for us here, went up 3.5% on that run over how many days? Let's see. Again, that was over 8 days. So the expansion phase resulted in a 3.5% pump on the dollar from February 23rd to the 23rd. Okay, give me the date there. The 23rd to the, looks like the 7th. So let's go ahead and take a look at that on Bitcoin's price action. The 23rd to the 27th. What did Bitcoin do? So Bitcoin put in a little bit of a rally from February 23rd to May 7th, or excuse me, March 7th. So Bitcoin flat as a board. That didn't help us out at all. What a bad example. Let me go ahead and give us another example. Let's look at the 7th, June 7th to the 19th on Dixie. June 7th to the 19th. 7 to the 19th. So that was the 19th. So yeah, the dollar did pump there to the upside. We saw full move was 4%. And let's line that up with volatility again. So low volatility, dollar goes up, Bitcoin went down pretty hard there. And then let's see this example right here. Low volatility, we get expansion. Dollar pops up. How much? 4%. And this looks like another 4% rally, 4% rally. Let's just check out what Bitcoin did during this pump from the 11th, August 11th to the 23rd. Let's see how Bitcoin fared out. We should know this. August 11th to the 23rd. Okay, so again, This is the 12th to the 23rd. Yeah. So that was a pretty significant drawdown. So I guess that just goes to show my first example. Bitcoin did not really do anything. The second examples, you saw as the dollar pumped to the upside, Bitcoin took it on the chin. And that was kind of the point I was looking to make there. So again, as the dollar gets volatility expansion, we're already starting to see the volatility gear up. Just on the 4-hour time frame, I was watching this. You got a big indecision candle here, and you know, a lot of volatility in the US dollar over a 4-hour period. We're talking about a 1.2% move, and that's what you see usually right before the big moves. It's like you get the tremors before the earthquake. And that's what I think we're on the premise of doing here. And on the daily time frame, as we see volatility expand, I would expect the price to go in the direction of the trend. If we do start to close dailies below this trend line, that'll let us know something different is going on, more specifically. And just pulling out the 5-day here, which will close tonight at in the next 7 hours and 54 minutes. So is the 5-day crossed up? We'll cross up today above 113. So that would be an interesting pivot to keep our eye on for the daily. Crosses down below 112.50. So we're right in a tight little range right here. And I do believe, yeah, we start closing dailies back above 114. That's going to look good for some new all-time highs. Even a 4-hour above there, probably good enough for me. And you can see Bitcoin and NASDAQ. So let's check in on the stock market really quick. Dow Jones looking a little bit stronger than the other assets right here, playing a bounce off the purple 200. And how high could a bounce get? If the dollar wants to pull back, I think we could rally up to the 618 fib at 32,000, somewhere between 31.5 and 32,000 if we get a little bear market rally for the Dow. Otherwise, weak bounces do come in at the 382, and weekly Stokes will cross down below 29,590. So Stokes will be crossing up. Volatility is kind of maxed out, so could get a mean reverted bounce there. Let's check in on the S&P coming into closure this week. Closing right below the 200 simple would not be good. Right above it would be more on the bullish side of things. And to confirm this as a local low, I'd want to see a closure back above 37.83. And we would have bullish divergence play out, likely with a move all the way up to the 21 at 39.60. And where do the bull traps come in? Coming into next week, what do we have coming up? Economic data wise, I'll be covering that, but it's mostly, I think, an earnings story. I think some of the bigger earnings are going to be coming out next week, like Apple and I forgot the other big one, but there's some big ones coming out next week. And if they are forecasting things to go down, like Elon Musk has been saying, hey, we're going to be in a recession. Tesla just took a big hit. Yeah, there's, you know, quite a bit of bearish news on the market as a whole. But again, I would just be watching the dollar. Forget what the news says. If the dollar starts to rally, you know, risk assets are taking a hit. If the dollar starts to come down, risk assets are probably going to play out a little bit of a bounce here. So just getting back to Bitcoin price action from yesterday, we were talking on the CMEs. Look how marked up I got this chart. The same thing is in effect right here on the 4-hour time frame. You got extremely low volatility, And I would expect the price to go in the direction of the trend, which what are we making? Lower highs and lower lows at the moment. This could be interpreted as two signals. One is a gravestone and the other is kind of a hammer. So the hammer, could be a reversal candle and we get to move to the upside on Bitcoin. Still, I'd be waiting for the bigger move to take place. And that's just how I am. That's why patience is the name of the game. So what areas am I looking at on the daily time frame? I want to see a closure above here or below here to indicate the next major move is in effect. What else do I see here? Stokes are crossed down below 19,186 for Bitcoin. And, remember, the more touches to a trend line, the weaker it gets. So, we may get one more bounce off of this trend line, but it looks like the trend line is getting weaker and weaker. And as we see volatility expand off these lows, we are going to expect a 25% move in either direction. And I have been postulating this over the past few days, that if the move does break to the upside, you would be probably looking at a 25% move to the upside. So where does 25% get you from here? Back to the top side of the range, which would give us another shot for some bearish divergence and another big leg down. Vice versa, I think the move will be greater to the downside than it would be to the upside, and giving us our first target coming out of the breakdown of this range. First target at 15.8, but a little more volatile of a move. I'd expect we get down to about 14,675. And that's only 25%, it looks like to me. So that's 22%. Where would 40% take us down to? That $10,000, $11,000 range. And I think that is what is at stake. And why do I say that? Well, the daily time frame is likely going to bleed over into the higher term time frame. So if volatility expansion starts on the daily, then you should see it on the 2-day, which the Stokes are crossed down at the moment. You will see it then on the 3-day and the 5-day, and they will all start expanding at the same time. And that'll let you know, hey, the move is in force, and you'd be looking for a pretty big move. 25 to 40% is nothing to shake a stick at, and that is why, patience is the name of the game right now. So that's it for Bitcoin. Hopefully, again, I clearly identified some levels and what I think price action could look like. Again, you on the daily time frame, you break the range, perhaps here, come back, retest it, and that's the bigger move, and vice versa on this side. You break the range, come back, test it, and you probably get the bigger move after the retest. That's, again, if I had to draw some squiggly lines on a map and give you a roadmap. Again, this isn't financial advice. I'm not a financial advisor, but that is what I'm looking at on the markets right now. And I'm keeping a close eye on the US dollar. And another thing here is going to be the bond yields. See bond yields coming down. So the 2-year hit 4.5% and will play out bearish divergence of the 2-dry variety. So, Could we get a drive down to 3.9 or the bottom side of the range, 4% for the 2-year? Yes, that would give some relief to the markets. And the same thing, you'd have some bearish divergence playing out there. So if we see a big correction in bond yields, they start to come down, you know, that would be a little bit more of a bullish sign. If bond yields keep going up, and keep in mind, we have another rate hike coming up. We got another rate hike coming up November 2nd, and then we're going to have the inflation report after that. So those are kind of the two major economic events on the table. Bond yields, and then obviously other currencies. The euro popping up 0.2% today. The yen popping up today after getting absolutely crushed. You know, if we get governed by this 9 exponential and these things just keep bleeding out, it will, you know, that'll mean the dollar's going up. And that's bad for risk assets. Brent also at 92, kind of looking to break the trend here. And I would mediate that with any kind of a closure back above 95, 95. Okay, moving on to some of our other assets, just taking a look around the markets. Ethereum, something that a lot of people are keeping a close eye on. And yeah, it's stuck in the range between 1372 and 1238. A daily closure above or below this region is likely going to get the next pretty big move on Ethereum. This thing's going to move in concert with Bitcoin, except for to a higher degree. And what do we have here? Yeah, so we've gone over this chart for the past few days in a row. This is a descending triangle, and with a break of this area, you know, we're looking at a minimum move down to this guy. A volatile move is going to bring you back to about $1,000. And I imagine this one is going to move in concert with Bitcoin. 2 days on the floor for volatility, and Stokes are up. We'll cross down below 1212. So there's a point for the bulls on this one. The 3-day is going to be down here today below 1306. Point for the bears. And volatility, momentum, you know, again, the expansion off of this phase is going to be very significant, I would say. And Ethereum's going to move, you know, probably 1.5 to 1 to Bitcoin. All right, what else do we have? XRP. Again, we've been talking about this one coming up into the death cross here. Stokes are crossed down. Volatility is coming down. And we are going to probably be playing out bearish divergence. Yeah, coming back from this pivot right here and this pivot right here. So 2-drive variety, not bad, and should get you a shot at least to the 618 fib, I would suspect, which is coming in right here at 40 cents. Yeah, that's, you know, even if it does rally back up one more time to the 236, I see this one definitely heading down to the 618 fib at a minimum. If that starts to break, then you know you're getting the full retrace back down to 32 cents. What else? What did I wanted to bring up? ApeCoin. This one is taking it on the chin. Oh, and I wanted to bring this up too. I just, you know, why set up TradingView? Why bother with all the charts and the lines? And there's some pretty simple tricks you can do to know, you know, whether the market is bullish or bearish. And these are moving averages. You've got the 50 and the 200, the 9 and the 21. And generally what happens if you get all the lower term time frame moving averages crossed to the downside below the higher term. So there's the 200, the green 55, the 21, and the 9 exponential. when they're all riding below each other, you're in a down market, right? Until the foreseeable future. And yeah, you can get some fake outs. But in general, right, if you went long right here, you were going to catch a run, up much higher. And if you went short right here, it's kind of golden cross and death cross mentality. But that is, some bearish price action, and you would expect the trend to continue until the trend reverses and all these things cross back up. And again, this is just on the daily time frame. You can see how powerful it can be when we cross to the upside right here. That preceded a massive bull run. And just one of the tricks of the trade I wanted to drop for you there. So you can set up a TradingView account and get the same moving averages for free. There's a link in the description below. And by the way, if you did like the content, please throw down a like button. And, if you're new, subscribe. And I'm going to finish up with, so we went over Ethereum, XRP, and we were looking at Ape until it got shut down here. So, and what else I wanted to check in was on Cardano, because this one is really breaking down, and we've had this target mapped out. If you've been following on our channel for some time, we drew it out way back here, and it looks like that's pretty much the next line in the sand. So this is the definition of resolving the triangle to the downside, the descending triangle. And how did we get this target? We just took the 50%. So when you have a descending triangle and it's about, so you measure the width from the 50% full, they typically break at 75%. And this is how you would get the measure move. It's probably going to line up with a fib as well. So you would go from the range high to the range low, and that can get a lot lower. Wow. If you do the last high to low, nope, that's not where I had it either. I probably had it right here. Somewhere in that zone, close enough is close enough. If you got short in this trade like we had called it out. Adam. So, and what I am keeping my eye on as well is some of the altcoins that really just pumped and are likely going to break down below these support levels. Atom being one of them. If it starts to lose this region again, I think, the next stop down is probably going to be around 432. And if Bitcoin goes, these things are going to go. So, yeah, these things are just trading pretty darn pat with the Fibonacci's. So we got a weak bounce up to the 382, back down to the 386. And if you start breaking back down below there, not looking good for Mr. Adam. Cardano, we checked out. Bitcoin, Ethereum. I think we ran the gamut today, guys. We went over bonds. All right, so breaking into the news section, I guess I'll start out with the crypto news that I found on Kitco, and I thought it was pretty interesting, although I don't know who the Aaron brothers are, but here it is. Bitcoin has another 50% downside potential, but the case for decentralized finance has never been stronger. So that was Altcoin Daily. And I guess that is the Aaron brothers. That's where they're from. But they spoke with David Lin, the anchor for Kitco News, and they said Bitcoin's recent consolidation near the $19,000-$20,000 support level is reminiscent of the bear market in 2018, when Bitcoin was consolidating near 6,000, eventually dropped by 50%, said Aaron Arnold. Now, back then, from my memory, a lot of people thought Bitcoin was the bottom. That doesn't make sense. Thought Bitcoin was the bottom. I think a lot of people thought Bitcoin was at a bottom at 6,000, and then it dropped to 3. No, I didn't want to do that. Computer's been running amok here this morning. Slow. I think I got to restart it. Got too many windows open. Come on, don't die on me now. All right. Yeah, so a few reasons Bitcoin could fall lower include sustained inflation, which would prompt the U.S. Federal Reserve to maintain its hawkish stance, a replay of the 2008 financial crisis in the stock market, OPEC cutting production oil, which would mean higher oil prices, and an escalation of the Ukraine war to the point where the Russian president Vladimir Putin wages war on the West, Aaron Arnold said. So still there are some macroeconomic forces that could present a bullish case for Bitcoin, especially in the medium to long term. He said, quote, what we're seeing, major bank intercommunicator Swift partner with Chainlink. We're seeing Ethereum go through a successful merge, Cardano following the Vassal hard fork. So we're seeing the developers flock from these to these layer one protocols. And Aaron said, obviously the news in 2022 and 2023 is macro, but the world's trends more centralized, more permissioned. I think there's a clear vision more than ever why we need a decentralized, censorship resistant protocol. So I love how they give a bullish spin on everything. And I really love that they highlighted, we have a clear vision for more than ever why we need a decentralized, censorship resistant protocol. Speaking of censorship, so I'm just going to let you guys think on that. They're giving some bullish case. They're giving some bearish case. And speaking of censorship resistant, Elon Musk trying to buy Twitter. Yet today, Twitter investigation instigated by Senate following the claims by the former head of security. What are they saying? They have concerns about the national security risks of bad actors being able to fake tweets from accounts of the world's leaders and major media organizations. Well, we know they've been doing that for years, and I think it really will be interesting to see what happens with Tesla and taking over Twitter and what kind of changes he might potentially make. I guess we'll check in on Twitter and Tesla stock, and then the last one, Snap, kind of the story of the day. But even Tesla, after their earnings came out, I believe yesterday, they missed earnings by about $1 billion. And, you know, this thing looks like there's going to be a major buying opportunity. If we start to, you know, lose this region. And what Elon was saying, they're not doing stock buybacks right now because they're gearing up for a recession that could get worse. Wants to have dry gunpowder on the side. What a smart guy. But as you can see, this looks pretty droopy. And on the daily, we are making lower highs and lower lows. What about on the weekly? On the weekly, just starting to cross down. If you start losing the purple 200, that's when you get into trouble. On the daily, you can see all the major moving averages just crossed down. So I don't know what, you know, I believe in Tesla. I think, you know, long-term, great company, great product. So we'll see how that goes. And then the story of the day, Snapchat falling apart, tech giant, or was tech giant, doing the full retrace. This is what we're talking about. You know, March of 2020, the COVID lows. Guess what? We just took those out. A big gap down. This thing's down 30% today. This should have been the meme stock. This is the one they should have been shorting. And we talked about gaps like to get filled, right? So let's just take off those moving averages. And what are we doing? We're filling this gap right here, and I would expect a little bit more downside, down to at least 711 right there. And then you got gaps coming all the way back up to the upside. So again, gaps like to get filled. Big gap way up here. I don't know if that'll ever get filled. But apparently Snapchat has no user growth, and they had no growth, period. They just reported zero growth. So not looking good for Snap. When everybody's using Instagram and TikTok now, I wonder how they're going to recover. And the other one, big hit on Pinterest. Another kind of, call it lame or stupid mobile app that nobody uses, going under the ground. I think things like Rumble and Parler, which Kanye just took over, probably going to do better, as they are along the lines of the censorship resistant products in the marketplace. And I think Google's got earnings coming up as well. That's the big one. So we've got Apple and Google coming up, and you can see Google stock is filling the gap down here. So if we shoot through the gap, where's the next stop? We'd be looking at $85, and for Google to retrace down 44%, not going to look good for the rest of the market. Apple, the one strong force in the market, which Apple, here's the news on Apple today. I don't know how investors are going to interpret this, but Apple ends consulting agreement with Johnny Ive, its former design leader. So it took, I think, after 3 decades, what did it say here? Yep, Mr. Ive and Apple have agreed to stop working, according to 2 people with knowledge of their contractual agreement, ending a 3-decade run during which the designer helped define every rounded corner of an iPhone and guided development of its only new product category in recent years, the Apple Watch. So I'm going to miss the guy. I love those smooth corners on the Apple iPhones. Anyways, don't know how. I wonder if he's exiting early with stock options because he knows something is coming down the pipe. I'd imagine he's got some kind of a golden parachute. Anyways, that's it for me today, guys. Hope you have a blessed and highly favored day. We'll check back in with you tomorrow, following up on the dollar and the expansion of the volatilities. Take care.